Okay, here's your rate market update for November 8th, 2022. So we've got some exciting stuff happening this week. We've got Election Day, one of my faves. Love Election Day. Get out there and vote. We have the bond auctions coming tomorrow. Not the most exciting of auctions, but they're out there. And then we have Thursday Consumer Price Index coming up. So the markets actually are anticipating some good news for the interest rate market, I should say. This is not political in any way. The way that interest rates react has nothing to do with the politics of things, but spending is something that causes inflation. And the way the bond market seems to be looking at things is when the parties are controlling the White House, the Senate, and the House, well, spending goes up. It doesn't matter which side is controlling all of them. If they do control them all, the spending goes up, and spending causes inflation, and inflation is causing the rates to go up. So there's some anticipation that there's going to be some split there, and it's going to be harder to pass additional spending when you don't have one side controlling everything, right? It becomes a process that needs to be far more deliberative, and less spending will be good for inflation. Less inflation will be good for interest rates. So that's number one. The bond auction, not too much to talk about there. Like I said, that's not the most exciting thing in the world, but the consumer price index coming out on Thursday, we are anticipating a drop in the CPI. So that's good. We have used vehicle sales fell 2% last month, 10% year over year. So again, this is all part of bringing down the inflation, which could bring down the rates. Also, other signs going into a recession. We have the NFIB, small business optimism gauge. That small business optimism fell. Businesses are planning to hire less. Delinquency on vehicles at 60 days or more is up to 1.5%, which is a decade-long high, I should say. So there's things there that are indicating that a recession is here, or at least near. So all that stuff seems to be pointing towards maybe by the end of the week, some rates coming down a little bit. We are seeing some softening today, but that's it, really. It's kind of like a wait and see. So let's see on Thursday where we're at. We'll have another update then towards the end of the day, and we'll dissect how all of this news has impacted interest rates. All right, have a good one. We'll see you soon.